What's up, millennials? Today we're going to take a look at a company called TWOU. TWOU is one of the leaders in online education, and in this video I'm going to give you some of my arguments for my bull case and my bear case. I already shared all my research with my premium Discord members because what I'm trying to do is create a so-called open source platform for research, if you will. All the Discord members can actually post his and her own research within the Discord so that everyone can benefit from that. So that's what I've done with TWOU as well, but also with other stocks and also cryptocurrencies. If you're actually interested in becoming a Discord premium member as well, then check out nesami.com/member, okay? You're going to get this research, but you're also going to get buy and sell alerts. So when I buy or sell stocks, I'm going to share my research. I'm going to give you additional videos as well. Let me first give you a brief introduction of TWOU. TWOU is one of the leaders in online education, and they first were mainly focusing on graduate degrees, but now they're also focusing on undergraduate degrees, but also boot camps and short courses, as we are going to see later on in this video as well. They right now have 75 institutions, university partners they are working with, and they have had 275,000 students since they started. So as I've said, they're working together with about 75 universities. I'm not from the United States myself, I'm from the Netherlands, so I don't really know all of these universities. But I did see some important ones, some big ones, like MIT, Harvard, Berkeley, University of Cambridge, and Yale as well. So these are pretty big names in general, I would say. Alright, so let me first give you my bull case for this company. So I think TWOU has multiple advantages. First of all, I think that education is going to be more and more online. We've already seen, COVID-19 more or less kickstarting this whole movement. And the thing is, right now we're looking at a multi-trillion-dollar market. According to sources, about 2% of that entire market is digitized right now. So I do believe that TWOU actually does have some major potential upsides if it is able to capture a large portion of that market. Then if we look at the revenue of TWOU, we can also see some interesting things, because it basically goes up about 30 to 40% year over year. Here we see the revenues of the last couple of quarters since Q3 of 2018. And we see a few things. Well, we see mainly this orange part, if we will, of the alternative credentials, which are the short courses and boot camps. That is going up. That portion is going up quite well. But if we take a look at the graduate revenue, so the revenue from graduate degrees, it is kind of flatlining, to be honest with you. It doesn't really grow as fast as the alternative credentials, right? I think that might also have to do a little bit with the COVID-19 impact, of course. So I'm really interested in seeing how that is going to work after the entire crisis has gone away. Now, another interesting thing about TWOU is, I believe, that TWOU could become a cash cow, if you will, when all the courses are developed. Because the thing is, TWOU at first has to spend a lot of time, has to spend a lot of money on all of these courses that they create. But after a certain amount of time, all these courses are going to be created, and then they just need to manage these courses, and they can just get a lot of revenue incoming while they don't have a lot of additional costs. Talking about cash, let's actually take a look at their balance sheet as per the Q3 of 2020, so last year, right? As we can see, they have about $481 million in cash and cash equivalents. And if we scroll down a little bit, we can see that they currently have about $268 million in long-term debt. So if needed, they could pay off the entire amount of long-term debt with the amount of cash they have on their balance sheet. Also, an interesting thing to note, 1 year ago, they had way less cash. And I think in August 2020, they had an offering. They raised $300 million by selling some shares. And then the last point I want to make for my bull case is ARK Invest. ARK Invest actually owns quite a bit of TWOU. They own about 15% of the total amount of outstanding shares of TWOU. There are about 72 million shares outstanding right now, and ARK Invest in total has about 11.1 million shares. They have 8 million shares in their main ETF, so ARK-K, 1.9 million shares in ARK-W, and 1.2 million shares in ARK-Q. So in total, a little bit more than 11 million. And as you can see, this purple line here basically indicates the amount of shares that ARK has invested. Now, as you can see, this line has been flatlining for quite a while, since like, well, what is this? Like August last year. They haven't really been adding any more shares, but the thing is they already own 15% of the shares. I'm not even sure if they're allowed to have more of the company in their own hands, right? I'm not entirely sure if they can have more than 15% of a company. So that's going to be interesting to know. By the way, there's also an interesting interview with Cathie Wood, so the CEO of ARK Invest, who's doing an interview with the CEO of TWOU, Chip Pasek. That is on YouTube. I'm going to put that in the link in the description as well. And then the bear case, if you will, the cons, the disadvantages of TWOU. I think that TWOU is a long-term play. It's not like the most hyped up stock. I don't think that this will actually go like 10x within 1 year. I don't believe that Reddit users are going to pump this stock to the moon and that this is going to be the next GameStop. I do think that this is just a long-term, almost like a value play, if you will. The second thing is that they might not have a great edge. I think they might not have a massive advantage compared to their competition. I think their CEO, for example, is solid, but maybe not exceptional. I think their growth, as we have seen, is good as well, but maybe not exceptional. I think their services, their products are good, but maybe not exceptional either. I'm not sure if this is going to be like the next Tesla of the education sector. It could, of course, become that one day, but so far I just don't see it just yet. Then if we look into Google Trends, for example, we can see that the amount of searches for TWOU in the United States has been going down a little bit as well. Now, TWOU is maybe a little bit general. I noticed that TWOU is also the name of a song from David Guetta and Justin Bieber. So maybe this is not the best way to construe a bear case, if you will. But yeah, it is one thing to take into account, because you can also have companies that do exactly the same thing, or do exactly the opposite thing rather, and actually have Google Trends that go up quite a bit. The next point has to do with growth. And as we earlier said in the video, we saw revenue numbers of like 30% to 40% growth year over year, right? The thing is, as we can see here in Q3 2020, they had $200 million in revenue. But they also had $100 million in costs of marketing and sales. So it actually looks like they are just paying for growth, because yeah, the more you spend on marketing and sales, the more you're likely to get in growth in revenue as well, right? So this is about 50% of revenue, which is quite a bit. I looked it up and it seems to be that 11% of revenue in marketing and sales is a little bit more normal. That is considered to be the average in the industry. So 11%, 50%, that's just an enormous amount of difference. And the last thing I want to talk about is more like a question. And I'm wondering if universities actually need companies like TWOU. My question is, can they actually get rid of the middleman? Because companies like TWOU need to provide an exceptional service, an exceptional product in order for companies, for universities to stay with that company, with TWOU, right? Because it could be the case that teachers could just talk with students via Zoom, they could just put their classes online and achieve maybe more or less the same result. So I'm not sure about that just yet. I need to find out if they actually provide an exceptional service, an exceptional product. So those are my advantages and disadvantages for TWOU. Personally, I'm a little bit in the middle, I would say. A while ago, I did start a relatively small position in TWOU, but I'm not entirely sure what I'm going to do with that position in the future. I first want to wait until the next earnings call and the annual report so that I can have a better understanding of this company and of their products. And then I'll decide if I want to add to my position or if I would just want to get out of this position and put my money in a better opportunity. So I'm really looking forward to your opinion here. What do you think about TWOU? And why would you be bearish or why would you be bullish about this company? I hope this video provided you with some value. If it did, please consider sharing this video with your friends who are also investing in the stock market. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.